All right, what's going on, guys? Today I'm going to be talking about the 1-2 setup. Now, this is a trading method that we have really made popular inside of the EzTrades community. And I'm going to be going through the step-by-step rules on how to use this strategy. This is a rule-based strategy. This is for all of my smart money traders as well as retail traders. Now, based on my personal experience backtesting the strategy, I found that this has around a 30 to 40, maybe even 50% win rate. Now, I know that sounds pretty low, but you have to keep in mind the risk to reward is oftentimes very large. In this case, it was an 8 risk to reward ratio. This was a setup I actually posted inside of the Pro Discord. Now I'm going to explain exactly how you can do the same. Like I said, this is a rule-based strategy. Make sure to watch through the end of the video. I really think that this one strategy could change everything for you. It's very simple. You do have to be patient. That is the only caveat. But once you see the right setup, you can execute. Now you might be asking, what is the 1-2 setup? This is actually derived from Elliott Wave. Now, I am not an Elliott Wave trader. In fact, you don't need to be an Elliott Wave trader either. All you're looking for in this setup is to see a break of structure or market structure shift to the upside. In this case, we'd have a market structure shift and then a retest down into our key fib zone or order block, enter a long position, and then target the structure high, the previous structure high. That would be your target take profit. So that in essence is what the 1-2 setup is. Now, this is very powerful on its own. However, we can't rely solely on a break of structure and retest to enter a trade. We need to see a few other things. All right, the first thing we need to do is identify our bias. Now, how do we do this, right? There's a lot of ways to identify a daily bias. You might identify it via a break of structure on a higher time frame, price above a certain EMA, etc. What I've found works best for identifying the daily bias is using the EzAlgo trend dashboard. Now, we've incorporated bullish and bearish Heikin-Ashi candles for the bias and also a strength feature indicating when one of these bullish or bearish candles has a flat back, so a flat back Heikin-Ashi candle. This indicates strong momentum to the upside or to the downside. Now, when we're using this strategy, even if we're entering on a 1 to 5 minute time frame, we really want to be looking at the daily and weekly bias, right? To make a long position valid, we want to see the daily and the weekly in the bullish bias with as many rocket ships as possible. Once we've established our daily bias, we're going to go to rule number 2. All right, rule number 2, we're going to wait for a liquidity grab. So for example, if we are in an uptrend with higher highs and higher lows and the daily bias is bullish, we want to look for a sweep of these lows, right? A swing failure pattern of these lows, and we must close above, a strong impulse move above. If there's displacement, that's even better. So I'll actually mark that down as well. What displacement means is just a strong impulse move up, leaving behind a fair value gap. All right, rule number 3, as price retraces, you want to draw your key fib zone. If that's a long position, it's going to be from the swing low to the swing high. Now, what fibs am I using, right? I'm using the golden pocket, so the 0.618 and the 0.65. Now, there's a few different ways to go about this. If you want to do something similar to the golden pocket, but you also want to get a slightly better entry, what you can do is set 2 limits, right? One limit at the 0.618 and then a second limit at the 0.76. All right, so you're going to set limit orders at the 0.618 and the 0.76. So in this case, right, as price is retracing, you'll look to buy somewhere around here in this key fib zone, targeting the structure high. All right, and rule number 4, we're going to enter the position using the DCA method, right? Dollar cost average. One limit at the 0.618, the second limit at the 0.76. You're going to enter the long position, stop loss below the swing low, targeting the structure highs as take profits. In this strategy, we're not going to be doing any moving stop loss to break even. If it hits our stop loss, then this whole setup is invalidated, so it doesn't matter anyway. So we want to target those structure highs as our take profit. All right, now that you guys understand how this strategy works, I'm going to show you guys an example that I posted in the Pro Discord last night and go through exactly what I was thinking when I took this trade. All right, so this is the setup that I posted. All right, let's go into replay mode here, and we're going to remove all drawings and pretend like we're trading this in real time. So at this point on the chart, I'm on the 15-minute time frame. I'm going to increase the zone width on the EzAlgo support and resistance, and let's also get out our EzOscillator. I like to have the EzOscillator for confluence. So in this case, a majority of retail traders are going to get bearish, right? We saw a strong move down. We're losing the support zone. wouldn't you flip short? Wouldn't you look for a retest and then short? No, because if we look at the daily bias, right, rule number one is we're looking at the daily and the weekly bias. You can see that we're still very bullish, right? We're still bullish on the daily and weekly. And if we look at the overall market structure, right, we're still seeing higher highs and higher lows. For example, let's go to the 1 hour time frame. We are still in an uptrend until we lose this low. This is the major swing low, major structure low. Until we close below this level, we're still in an uptrend. And now we're looking at rule number two. Now that we've identified that the bias is still bullish, we're looking at a swing failure pattern or a liquidity grab of this level. Now, at this stage, we didn't get that successful reclaim yet, so we're still gonna wait for more confluence. At this point, I would recommend going down to the 5-minute time frame, and this is where we're gonna be looking for some more bullish confluences and possibly an entry. One other thing I want to note on the 15-minute time frame is that we're under the point of control. Right, so the point of control is right around here at this 15-minute GP and at this 1 hour resistance level. That's a good thing. We want to be longing below the value and shorting above the value. In this case, the point of control is the value, so this position is valid. And you can see that the oscillator is also in that oversold zone as well. And now we've had a successful reclaim of this level. So step number one is we've identified our bias is bullish. Step number two is we're waiting for that liquidity grab, which we have gotten, right? And we've closed above. This is a successful swing failure pattern. And now we're gonna be waiting for that break of structure or market structure shift to the upside. So we're gonna wait this out, starting to come back up, and there it is, boom, right? Not only have we reclaimed this 1 hour support zone, we've also had a successful market structure shift to the upside. This is on a 5-minute time frame, mind you. So now we're gonna be looking to draw our fibs, but we can't draw the fib yet until price retraces. All right, and now we have a valid retrace, right? We have our golden pocket automatically drawn for us on EzAlgo. But remember, since we're going to be entering with limit orders, we want to set one limit at the 0.618 and a second limit at the 0.786. So this would be our long thesis, stop loss below the swing low. And we're going to be targeting the structure highs as our first take profit. You could do these structure highs as your first take profit. I don't like that risk to reward. It's only a 1.5. So I really want to target these highs all the way up here for the first take profit. Consolidates a bit, still does not touch our key fib level. And there it is, right? Now we have one order filled. I don't believe the 786 was tagged. I think we just missed it. We're seeing some bullish divergences here on the 5-minute time frame. Then we see another break of structure right here to the upside, confirming that we made the right decision getting into that long position. And eventually we hit our TP right here. We could also target this structure high right here as our second take profit. So we have also successfully tagged our second take profit. At this point, you should be mostly out of the trade, if not fully out of the trade. And that is how we trade using the 1-2 setup. So again, you want to follow all of these rules to a T. Now keep in mind, there's other ways to take profit as well. Target the negative 0.27 fib. I've seen people use that. That works very well. This works across all assets, by the way. So I'm showing you guys this on crypto. This does work on Forex as well. This does work on futures. So this works on any asset. Now, the reason this strategy works so well is because you're not immediately entering off of a swing failure pattern. You're actually waiting for that market structure shift, for that candle close above the previous high, for confirmation, and then you're drawing your fib. So you're kind of combining like 3 different strategies in one, but it definitely works. And if you use the oscillator and confluence as well, as you can see here, while we were consolidating at this level, creating this bullish checkmate pattern, we're also seeing some bullish divergences on the easy oscillator, right? Price is staying flat as the momentum is moving to the upside. This is a type of bullish divergence that we talk about as well. So that is it for the strategy. Let me know if you guys have any questions down in the comment section below. I think this is pretty straightforward. Like I said, the beauty of this strategy is that the risk to reward is oftentimes very high. If I could give one more word of advice for anyone who's going to use this, I'd say make sure you let your thesis play out, all right? Especially using a strategy like this, you don't want to be taking profits too quickly. In fact, I'd argue it's better to get stopped out in a trade like this where your stop loss is right below the swing low, entering on the 786, because the loss will be so small, especially if you're practicing good risk management, but you don't want to close your position too early. You want to let your winners run and really target those structure highs. The 1-2 stems from the Elliott wave theory, which says that there's going to be a 1, 2 retracement back down, and then a 3rd to target the structure highs. So try to understand exactly why this strategy works, and you'll feel more confident about entering the trades. Remember, you're going to be targeting the structure highs. If you guys enjoyed this video, feel free to leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.